have recovered in 1 year. So remember.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand and decode Reliance Industries Q2 earnings, the biggest company by market cap listed on the stock exchanges. Reliance Industries has reported a revenue of 2.32 lakh crore rupees. This time around, we have seen a profit of 17,394 crore rupees, which is a bump up of 27% on a year-on-year basis. Well, and on a Q-on-Q basis, the profit has jumped from 16,011 crores to profitability of 17,394 crores. Let's look at the revenue number as well. There is a bump up again on the top line, 2.32 lakh crore rupees versus 2.07 lakh crore rupees. However, margin have actually seen a dip of dip towards 17.7% versus 18.3%, and we've also seen the EBITDA jump, however, at 40,968 crore rupees versus 38,093 crore rupees. This is as far as the main consolidated numbers are concerned, and we will then break down into Jio, Retail, Alto Chemicals, Petchem business as well. But let's quickly get our guest on the show. Mr. Anand Tandon now joins in. He is a market expert. Welcome, sir, and thank you so much for taking the time out. Prima facie on the headline numbers, profitability of 17,394 crores and revenue of 2.32 lakh crore rupees. Is it as per your expectation?
I think whatever the analysts have put out, it seems to be a little better than that. Certainly a beat on the EBITDA fairly significantly, and at the PAT level too, it has been quite good. Most of the numbers that are being reported right now seem to be fairly positive as well. I mean, retail has done well. The ARPUs have increased to some extent, and therefore, clearly there is an improvement in the portfolio of Jio in terms of the product mix, the petrochemical and and the oil business has done as per expectations.
Okay. What about margins? Margins have seen a dip to 17.7%. Is that a bit of a concern, and what could be the key reasons there?
Well, I don't know about the particular reasons for the moment, but I don't think that you should be looking at consolidated margins. You have to really look at each of the individual companies.
Sure.
And many of the companies which are the growth businesses are still in investment mode. We are still looking at a very large amount of money that is to be committed to the energy side. There is already slight improvement in capital utilization in retail and Jio, but even then there is some way to go. So we are still in investment mode as far as Reliance is concerned. So margins for the quarter are not particularly relevant in my view.
Okay, let's delve into the details then. The Jio numbers had come in earlier, and we had seen the profit of 5,058 crore rupees as reported. Now, this is the smallest profit increase in the last 7 quarters. Some of the reasons mentioned are hurt by higher expenses, lack of recent tariff hikes as well. Although on a sequential basis, this was a jump of 4%, registering a growth of 12% year on year. The ARPU numbers have come out now. 181.7 rupees, and the ARPU has been on a steady growth trajectory from the last 5 months odd or so. We have seen the ARPU for Jio to improve from 177.2 rupees to all about 181.7 rupees. How do you sense the Jio numbers in total? What would you like to say here?
Well, as I said, it is still in investment mode. You're still looking at a new announcement that they made today in terms of the air fiber. That has the potential to bring in a very large number of people who are not yet, who do not have access to broadband as of today, and to a lot of the OTT platforms correspondingly. You've also announced, the tie-up with Disney, etc. So to my mind, Jio to some extent is still work in progress. There is no question that the ARPU will improve over a period of time. As you mentioned, it has been going up, but rather slowly. And as you also mentioned, there has been no increase in the tariff for the current quarter. So
Yes.
without changing tariffs, you're still getting a slight increase in ARPU, which essentially means that people are trading up in terms of the product portfolio that they are really accessing. And I would imagine that that's a trend that will continue as a better and more coverage happens on both the Geo fiber as well as the Geo fiber.
Okay, let's also talk about the retail numbers then, sir. Reliance Retail Ventures, the key financial highlights include the revenue of 77,148 crore rupees. This is surged 18.8% on a year-on-year basis. The quarterly EBITDA has stood at 5,820 odd crore rupees, which is up 32.2% year-on-year. The total footfall has crossed 260 million across formats. There have been 471 new stores that have opened, and there's a capital raise of 15,314 crores in Reliance Retail from KKR and other institutional investors as well. On the numbers front, Reliance Retail, how does it look to you, and has it met your expectations?
Well, I don't know the details yet in terms of same store sales growth, and that's the important figure for retail as far as I'm concerned.
Yeah.
If you do have a number, I would love to hear it. But otherwise, again, it looks like it's a reasonable number, but it is difficult to understand how much is because of new portfolio and how much is the upgrading of the current sales portfolio.
Okay, we're also now joined by Abhishek Jain. He's the head of research at Arihant Capital. Abhishek, welcome to Business Today TV. Your own thoughts of the overall numbers that you've seen so far. The profitability coming 27% higher at 17,394. Revenue coming at 2.32 lakh crore rupees. Margin seeing a slight dip on the all across numbers.
As the numbers are largely in line, slightly below the EBITDA side. The top line is a slightly beat than our estimate right now on overall
Okay.
basis, but the EBITDA number is a slightly weaker, or a PAT is also reduced by a few hundred crores. But I believe rather than for a complex business like Reliance, when you see, one should avoid looking at the quarter-on-quarter basis, because there are a lot of moving parts are there right now. On overall basis, if you see right now, like OTC business has done decent right now. We were expecting a decent, and on the GRM side, I don't have the numbers, but I was expecting GRMs to be better on overall basis. GRMs are expected. I don't know, $12.2, how much is there right now at this point of time, but GRMs are expected to work in the favor. Also on the ENP side, the numbers are there. I'll be more interested like the numbers which they have done it on the Geo, where the numbers look slightly impacted by the uh, maybe like people are talking about the ARPUs are slightly disappointing side, but the PAT numbers or EBITDA numbers are largely slightly below, like largely in line only. So I may not be, because in this quarter we haven't seen, like as Anand sir has earlier said, also there has been no hike, but by Reliance to its customers recently. But I think that is numbers wise okay. I believe the overall share of EBITDA on the retail pie is continuously increasing, and basically B2C customer which you talk about is continuously increasing, which is a very healthy point right now. I think this will. I'll be more interested in the management commentary on the analyst meet, which is there at 8 o'clock at this point of time. The call which is happening.
Okay,
And also
yeah.
also about the investment in the new energy business, what they are talking about, how they are saying, and also one more important announcement which the board has announced. Appointment of the next generation in the
Yes.
as a non-executive director, which is the next level of generation and next level of management coming from the promoter side.
Okay, great that you pointed this out, Mr. Tandon. How do you really see the approval of the second generation to now come in to the picture now finally and formally, the shareholder approval being given as non-executive independent directors? Your own thoughts?
Well, I think it was only to be expected, that the next generation would be slowly taking over and joining the company. And we've already seen signs of it at in various divisions. Uh, to the extent that there is now clear path of who's going to be doing what part of the business, hopefully it will lead to a more amicable settlement going forward, unlike what we saw in the generation that is just handing over control. So from that point of view, so long as Mr. Mukesh Ambani continues to remain overall in charge to direct where the investments are happening and to manage the overall environment, I think the actual the each division being handled by one of the designated successors would be a good idea generally.
Right. Let me also read out to you Mukesh Ambani's statement that has come in, RIL chairman and MD. He's mentioned that resilient performance of the O2C segment despite volatility in energy markets was led by strong growth in the fuel demand in a supply constrained market. Weak global demand and supply overhang continue to impact downstream margins. The growth of oil and gas business is particularly noteworthy, with production from KG-D6 block ramping up and providing valuable fuel for energy transition to the Indian economy. Mr. Tandon and Abhishek, both of you, I will ask you this question. Over the last few years or so, the entire focus has actually shifted to understanding the newer businesses more than the traditional business on Jio, on retail, and the way they are expanding. And now, of course, just like how Abhishek pointed out, he's keen to know what are the plans as far as the new energy business is concerned. But what about the traditional businesses, the OTC business, and the impact that Mr. Mukesh Ambani has mentioned of the weak global demand and supply overhang as well? Mr. Tandon, starting with you.
So, obviously the traditional business is a problem in terms of ESG, right? I mean, to the extent that you're dealing with oil and gas, it is something that over a period of time and fairly soon, one has to find transition. To the extent that there is already, as Abhishek mentioned, fairly significant of the order of 75,000 crores investments in the new business, in the new energy business, some of which comes out from the existing business. It's not all new, but to the extent that it's being offloaded from the existing business and you're looking at hydrogen, etc., as the new source of energy and going forward. And Reliance's attempt to be one of the leading players in the hydrogen cycle, it is certainly going to add value to the company. The traditional oil and gas business will, over time, have to be phased out. Now, the only question is over what period of time. Certainly, new investments are going to be a bit challenging in terms of setting up new refineries or expanding capacities, and the cost of that will eventually have to be borne by the consumer at some stage. But that is not necessarily the growth business. So obviously, the market is not now interested in seeing where the cash flows generated from the oil and gas can be put into, and it has been so far done fairly successfully in new age businesses.
Okay. Mrs. Jain, let me understand from you some more details as far as Jio numbers are concerned. Of course, you've discussed the ARPU numbers, 181.7 rupees, and the net subscriber additions accelerating over 11 million during the quarter. The Jio network has grown 28.5% over here. Your own thoughts on, and of course, the announcement coming in that they expect a pan-India rollout of 5G by December 2023, within just 2 months as well. How do you see the overall contribution of Jio increasing in the overall consolidated numbers and the importance of this segment too?
And the numbers look very healthy, ma'am. If you see on overall basis right now, the data traffic was very healthy and risen at a very steep at last quarter, which was an IPL heavy. So this quarter, if we are growing, even the data is growing by 8 to 9% QOQ, which is a very healthy number at this point of time. When I was looking at the numbers, also they have on the retail side, I believe the Reliance has been the kind of brands which they are putting in India at this point of time. Like recently, in the on the commentary also, they have talked about new players like Supertry IP. They have won it for India, and they have a lot of brands they are coming it right now, which gives them a very good visibility on the consumer side of the business. Also on the Geo side, they have talked about they have on the rural side, the Geo phone have started picking up very well at this point of time. I think this is a very healthy signs. Things are moving. A lot of people are moving from 2G to a 5G phone, which is a very big transition right now at this point of time, because the entry point is so lucrative for the investors right now, for the subscribers. So I think they have been, it's very healthy numbers. There's, apart from the subscription growth, the data growth was very strong, the voice growth was slightly flat, but on overall basis, the numbers looks very interesting at this point of time. And I'll be more interested in the geo and the retail part of the business, where the company has done very well.
Okay. One question that I wanted to put to both of you, as far as the stock price is concerned, the stock has been languishing in the last 34 odd months or so. Is there anything that we can now expect on the stock on the basis of the numbers that have come in that could perhaps provide, strength for an upward journey again? Starting with you, Mr. Tandon.
Well, I think the market will find succor in the results that have come through. Now, the market itself looks a little toppish right now. Of course, near term, it may have just seen a bounce today, and because of the overall conditions. But given the context in which we are operating around the world, there does seem to be perhaps some more downside in terms of the stock markets in general. India is also not particularly cheap. So the near-term stock market performance of the stock will obviously depend to some extent on where the overall market is headed. But I would think that it would be one of the outperforming stocks perhaps going forward from here, as the new generation businesses become more and more relevant in the overall picture.
Okay, understood that as well. I also wanted to ask you, Mr. Jain, apart from the question that I put to Mr. Tandon, something as far as the O2C business is concerned. But first, let's hear from you as far as the stock price is concerned. How do you expect the stock to react to these numbers on Monday?
I believe Reliance's stock should not be traded on the results play. Like for a trader, I have hardly seen Reliance doing very well after post numbers. So I don't think so. Any Reliance specific, you could make a trade out of it. I believe for an investor, this can be a like maybe a 1 year, or we have seen 7 years of underperformance in Reliance between 2008 and 15, and the kind of outperformance they have seen in next 4 years. So rather than looking at a 1 quarter or something like this, I believe one should look at a 3 year or longer period of time story, with the new next generation coming into the picture, which is bringing a new deal and energy right now, and with the OTC, with the consumer business doing very well right now. So that is something which I believe there is an opportunity for an investors right now. So you can think, looking at, rather than looking at a trading point of time, I would avoid Reliance as a trader right now. I would be more buying as an investor, and I believe there is a lot of opportunity on the Reliance as an investor in next few years. The money is going to be made on the table.
Right. Mr. Jain, since you pointed out about the next generation, wanted to ask you, how critical is the role going to be for all three of them, and what should investors be really looking out for as far as their own thought process is concerned in taking each of their verticals going forward?
So one good thing, ma'am, if you see right now, most all three uh, scions of the Reliance empire right now are being actively involved in the business for last few quarters, last few years. So it's not like this key they've been just introduced as a uh, outsider right now. So most of the players are been there in the in the segment which they are doing it right now. I think that's a very positive sign, and this will help the investor also the clarity if they want to be what kind of interest, like they want to a certain set of management, they can remain with a certain sector of business also going forward. I believe demerger opportunity is quite possible in next few years for the investors at this point of time. So I don't think so, rather than looking at, and there won't be any uh, disagreement like we have seen in the earlier generation should be there. So there is a definition of role, it gives us clarity for the investor also, and I don't think so this is a very positive move when you take it as an investors, for the Reliance investors.
Okay, let me now come to the oil to chemical segment. Mr. Tandon, we've got some numbers here. Quarterly revenue coming in at 1,47,988 crores, that's $17.8 billion, down 7.3% on a year-on-year basis. The quarterly EBITDA has come in at 16,281 crores or $2 billion, and this is up 36% on a year-on-year basis. How does this sound to you?
Well, I don't have the comparables earlier, but by and large, it was expected that you would get good GRM margin and therefore good part business on the refining side and not so great numbers on the petchem. If that is what the company has reported, then that would be in line with expectations.
Okay. Mr. Jain, I'll take your view as well on the oil to chemicals business. It was expected that the refining and upstream business will boost the OTC growth this quarter. Do you see that reflecting in the numbers?
Ma'am, when I see right now, the OTC business is largely it's in line with what the people are talking about right now, and I think one need to understand the discounts from Russia has declined on a quarter-on-quarter basis right now. So, despite that kind of environment, the kind of volatility we have seen in crude, the numbers looks very healthy at this point of time. So I don't think so. Rather than one should look at one quarter or this thing for the company like Reliance right now. I think OTC business are largely better than what, or maybe in line with the investors only. I don't think so. There's a negative something which should be taken in this thing right now. And
Okay. Mr. Tandon, your own expectations as far as the new age business is concerned, what are you expecting to hear from the management commentary?
Well, again, I think as Abhishek has been saying, you have to be looking at slightly longer term period. The main important issue is that you are looking at lesser capital intensity in some of these businesses, most of the investment behind, and maybe some more to go for the current year. But going over the next 2 or 3 years, you would expect to see better, a lower capital utilization and therefore higher ROEs coming through as debt gets paid down. One of the key issues with Reliance has been the enormous amount of debt that has to be carried for the investments, and I expect that as that intensity comes down, much of that debt will also slowly get paid off, and that itself will, for example, get added to the market cap, even assuming that enterprise value remains pretty much the same. On the other hand, you do expect to see fairly significant increase in earnings. Already, you are looking at earnings which have been growing secularly, and there is no reason to assume that would change any, the direction will not continue in the same way. One of the key things you have to remember is that, Reliance in the earlier generation was largely dependent on a business which was very government focused. And the government policies made a major difference to how it would go forward. Going into the next generation, if you look at most of the policy requirements that have been sorted out. So while there were some issues with telecom initially, and even with retail because of foreign investments and whether they should be allowed or not allowed in in multi brand retail and so on, I think that is now behind us. So the need for more government interaction or to manage the environment continues to fall, which means that technology and innovation is what will now drive businesses going forward. And that is something that perhaps one can expect the next generation to deliver better than perhaps the earlier ones.
Okay. Mr. Jain, last word from you then on Reliance Industries. What are you expecting from the managed commentary? And, what do you really make of the last 2 or 3 takeaways that you'd like to share with all our viewers?
So one thing which we want to like to understand with the management on the new energy side, as I already mentioned. Second is how because the Russian discounts have started coming down right now, what they are getting. So how the OTC business will going through right now, and the outlook on the GRMs. These three things will be looking out for the.
All right, fair enough. Well, thanks to both of you, Mr. Tandon and Mr. Jain, for being with us on this special edition and decoding the earnings for all our viewers. As the advice is coming in from Mr. Jain, time to avoid being a trader on Reliance Industries, but look at a long-term picture. Clearly, the details are awaited from the con call as well, where the management is expected to detail some more details as far as the new energy business. The capex plan for that is continuously planned. Right now, if we talk about the earnings so far, 2.34 lakh crore rupees of revenues for Q2 for Reliance Industries, almost flattish with just a % of a move, but it's the profitability that has seen a 27% surge to 17,394 odd crore rupees. Is the Jio numbers that continue to be steady. They've contributed, strong numbers as far as the ARPU is also concerned, which has improved to 181.7 rupees. We've also seen a steady move coming in on the retail front, a 10% surge on the Q2 revenues from Reliance Retail, margins improving to 7.6% as well. The two conglomerates, O2C Business, slight dip coming in on the revenue front. but there is an improvement as far as the EBITDA numbers are concerned. The net addition of subscribers for Jio also continue at a healthy pace. We've also seen that despite taking any kind of price hikes, they have still maintained some kind of an uptake for the Jio business. Remains to be seen how the conglomerate will now be planning on moving as far as the capex plan is concerned going forward. With that, we'll continue to decode for you more insights into Reliance Industries as the numbers come to flow in. But we will also get you all the updates from the world of business and stock markets. So don't go anywhere and stay tuned to Business Today Television.